Hey, good morning, everybody. Today is Friday, February 5th, 2016. My name is Cliff Backus, and this is your PushButtonStockTrading.com daily video market review. Much of what we do at Push Button Stock Trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. The C in CANSLIM stands for current quarterly earnings and sales, and reminds us that we should be looking for stocks that have a minimum of 25% year-over-year increases in quarterly earnings and or sales, and preferably accelerating earnings and or sales. The L in CANSLIM stands for leader or laggard. It's important that we identify where the leadership in the market is. To this end, we use HGSI, High Growth Stock Investors, Spectrum Analyzer to identify market leadership on a daily basis. So let's get started with that. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 8 came from the semiconductor devices industry group. 7 came from precious metals. We had 7 real estate investment trusts. There were 4 from the trucking industry, and rounding out the top 5, 4 from the logistics services industry. We've been seeing a lot of real estate investment trust recently, and we've also seen a lot of semiconductor devices recently. These may be good places to look for leadership in the market as we begin to develop some momentum to the upside. If we begin to develop some momentum to the upside. Let's start this morning with the Russell 2000. As I've been saying for probably a little over a month, I think the Russell 2000 is the key to the market going forward here. We need to see the Russell take out resistance down here in the 1040 area. Yesterday, we made a little bit of progress in that direction, but it was somewhat unimpressive. Next area of resistance for the Russell is this trend line. This trend line is the bottom of this channel that was established when the Russell initially started to break down. We need to see the Russell take out that area of resistance. Then the next area of resistance it wants to assault is the 1040 area that we've been talking about. We'll see if we can get that done next week. In the meantime, let's see what the NASDAQ Composite's up to. But before we do that, the M in the CANSLIM acronym stands for market. And to my way of thinking, this is the most important element. So let's take a brief look at the market. Stocks meandered to small gains yesterday on mixed volume. Volume rose on the New York Stock Exchange but fell on the NASDAQ. It's worth noting that in the past 2 trading sessions, while for the most part the S&P and NASDAQ have trended higher, the IBD 50 and the 8585 closed lower. This is relevant because the IBD indices are continually updated with leading momentum stocks. They're good indicators of what market leadership is doing. When the momentum leaders are diverging from the rest of the market, it's worth noting. Right now, that leadership appears to be indicating caution in this market. Our market timing model appears to be telling us the same thing. We're currently on a primary sell signal with a secondary aggressive buy signal. An aggressive buy signal indicates that aggressive traders can buy stocks but should not be employing margin at this point. More conservative traders should continue to accumulate cash. Advancing issues outpaced decliners by a 3-2 margin again yesterday. The New York Stock Exchange advanced decline line continues to look considerably more bearish than bullish. New lows continued to better new highs, although our new high, new low indicator remains on a buy rating on the market. New high, new low measures the overall rate of change in the daily new highs versus the overall rate of change in new lows, and is typically one of the first indicators to signal a change in market direction, positive or negative. The McClellan oscillator remains on a buy signal. Large capitalization stocks bettered small again yesterday and continue to outperform on a 10-day moving average basis. Small caps typically outperform in bull markets. We're getting very mixed signals from the market. Proceed with caution here. Okay, yesterday, the NASDAQ was up 5.32 points or 0.12%. We closed at 45.09. If you recall, the prior day we had closed just underneath support resistance down here in the 45.06 area. Yesterday, we edged just above that level, closing, like I said, at 45.09, just a shade above the 45.06 support resistance area. So we've recaptured support, and we'll see where we go from there. Trading volume yesterday was heavier than the prior day, giving us an accumulation day. For you followers of William O'Neill, we are currently in an uptrend in the market. We have been since January 26th. Since confirmation of the uptrend, we have seen 3 distribution days. That's a lot of distribution in a very short period of time. The NASDAQ composite is bracketed by support down here in the 45.06 area. Next area of resistance I would expect to be this trend line. That trend line, as we've been noting, goes all the way back to the beginning of the bull market back in 2009. Were we to break above that trend line, the next significant area of resistance is up here in the 4900 range. Our market timing model currently is on a sell signal, a primary sell signal, but we have a secondary signal of aggressive buy, which indicates that aggressive traders can buy stocks but shouldn't be employing margin. More conservative traders should continue to accumulate cash. Let's take a look at what the S&P 500 is up to. Yesterday, the S&P was up 2.92 points, or 0.15%. We closed at 1915. Notice how we balked at resistance at this trend line. We've been saying recently that that trend line is the next significant area of resistance. Yesterday, trading volume was higher on the S&P 500. And we are currently in a confirmed uptrend in the market. We have 2 distribution days, which is a little bit of a cause for concern. S&P 500 right now is bracketed by support down here in the 1867 area, resistance at this trend line. Were we to break through that trend line, our next significant area of resistance would be up here in the 1993 range. Our market timing model on the S&P 500 is on a sell signal, but we have a secondary aggressive buy. Before we go, I want to talk about Smith & Wesson. Smith & Wesson Holding Corp. manufactures firearms including revolvers, pistols, rifles, and firearm-related products and accessories. Stock recently broke out of this first stage cup with handle base. Very long handle, and it's kind of interesting. It's worth noting that within this handle we had another small cup and handle base. Back in mid-December we took out our pivot point in the 1897 area. Smith & Wesson gets a 68% checklist rating, and yesterday, although it's kind of hard to see here, we traded higher trading volume than any down day in the past 10 trading sessions, which is our definition of a pocket pivot. It's worth noting that Smith & Wesson's had a lot of positive volume, a lot of accumulation volume recently. And because of that, this pocket pivot is interesting. As we break above the 10-day simple moving average, 21-day exponential moving average, and we hold support at the 50-day moving average, which we show here in pink, or red. Keeping in mind that this is really kind of a squirrely market and we want to be cautious, aggressive traders may be interested in Smith & Wesson on this pocket pivot. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.